Soundstripe.
Hi, welcome back to this Wealthy Wednesday with the Property Queens. Today we're going to be talking about diversification, and Hannah is going to start it off for us.
Yep. So there are many benefits to diversification, and first let's start by just touching on what diversification actually means. It can mean a variety of things. So you can have diversification within your income streams, which we've already talked about. We'll touch on that a little bit more today. And then diversification within your asset classes, your portfolio, and that can be businesses you've invested in, that can be equity investments, real estate investments, really any type of investment. So starting out looking at things within asset classes, different assets or properties, investments that you own, we have our hard assets, which is real estate, something you guys know a lot about. So you have your primary home, you have your secondary home or homes, and then you can have long-term rentals and short-term rentals and different types of investment properties. And Shannon, I know you know a lot about investment properties. What are some of the benefits you see, and what type of investment properties do you see out in the market?
Yeah, so I mean, Airbnbs are really popular right now, short-term rentals, things like that, which is really nice because if you plan on having, I know me personally is, I want to live a bunch of different places, so it's nice to have like vacation homes, if you will, but you can also use those vacation homes as, you know, Airbnbs when you're not there, or, you know, I mean, also rentals in general, like then we go back to long-term rentals, having those rental income, you know, because you know at least with a long-term income, you know, it's pretty much as long as everyone pays their rent on time, but you know it's going to be like more dependable, steady, things like that, versus short-term rental, it can be seasonal, like Airbnbs, especially if you're getting like a Airbnb in certain locations by a beach or something, right? It's going to be more popular in the summer, or, you know, if you have a cabin where, you know, it's good for snowboarding, that's also going to be seasonal, more like a winter thing. So things to think about with that. And then obviously, you know, having a primary, a lot of people think that their primary is their asset. And generally how to look at assets, the only thing that's an asset is what's putting money back into your pocket. So when you sell it, it'll be an asset. But I mean, it is an asset in comparison to the other example would be, you know, renting yourself. So at least you're not throwing away money renting, but you're really going to make money with your secondaries, you know, and rental income and stuff like that.
That income money, that money coming in, and then your primary is more of a long-term growth play, is how you can look at it.
Yeah.
And it's almost like tucking some money away towards a savings account that's earning a little bit of interest, because hopefully your primary residence is going up in value as you continue to contribute to that principal.
Exactly.
Yep. Yeah, cool. And one thing with Airbnb is it's great to diversify with those short-term rentals, but one risk that I've always seen with those, what if it's not rented out every night?
Right.
And
That's what I was
you run that risk of not earning your money back, which here in Nashville, we have a great market, and I think a lot of places do right now. But I always wonder, what's the next disruption they're going to be? What's going to stir up the Airbnb market?
Yeah, I think it's good to do research too and just look at other like properties. So if you're doing an Airbnb in certain areas, see how the other Airbnbs are doing. It's very easy to do that. You can go on Airbnb itself and see how often a certain property that's similar to yours is renting for, and you can also figure out how much to price it for by looking at what other like units or properties are renting for or per night.
Yeah.
So yeah, I mean, there's a way to hedge it so it's less of a risk, I guess is what I'm saying.
Yeah, and pricing it different depending on the time of the week or month or season, I guess.
Exactly. Knowing your seasons for your location. Yeah.
Cool. So real estate is a hard asset. It's something you can touch and feel. Some other hard assets are commodities. So gold, silver, precious metals. You can have jewelry or coins. You know, back in the day, I had a great aunt that had tons of coins that she had invested in. which turned out to do okay, but it's a little bit different way of investing. There are ways that you can invest in some of those hard assets indirectly without actually holding that hard asset through exchange traded funds, which is something that's traded every day on the stock market, and buying indirectly, so you're participating in the growth of those precious metals without actually holding it. You have a little more liquidity there. So some other forms of assets are your car can be an asset. I typically don't like to look at them that way, but some people do collect cars and trade them.
Yeah.
So there are a few collector's items that could be considered assets.
Yeah.
It depends on what you're collecting.
Yeah.
Another type.
Oh, I was just gonna say, if you're getting a brand new car off the lot, probably
It's a
not an
depreciating asset.
Depreciating, yeah.
There are some collector's cars, and it really depends on kind of what your niche collector's market
Yeah,
is.
yeah.
Some other types of assets when you're looking at diversifying. So you have your hard assets, your real estate, things you can hold, touch, and feel. And then you have your financial assets, which are stock investments, your fixed income, life insurance, your businesses in some cases, and really diving into those. With your stock assets, you have large cap companies, which are your Fortune 500, your large mega companies. Think of your Amazon, Google, Microsoft, big names like that. You have mid-sized companies, and you have your small-sized companies. Within those, you also have growth stocks and value stocks. And then even further diversifying, you have international, you have emerging markets, which are a type of international stock, and they are more of your smaller countries with lower GDPs. And then even within that, you have tech sector, so you can diversify within sector. So tons of ways you can diversify, and by spreading your money out and participating in a little bit of everything, it gives you
Kind of more like a safety.
It
Right?
can be. It can be. Now, it's not guaranteed
Yeah.
to perform better than concentrating everything into one asset, but by diversifying, it can provide a bit of a safety net for you.
Yeah, because
Yeah.
you're not putting all your eggs in one basket. Versus like, if one, tanks, at least your other ones are performing, or vice versa. So.
Yeah. And even within fixed income, you can diversify further there. You have your high yield fixed income, you have junk bonds, you have your corporate debt, your municipal debt, your federal debt. You have all different types of debt that you can invest in. So some of the benefits of diversification among countries can be diversifying away from some of the political risk. Some countries are a little bit riskier than others. Some are fairly stable. So you can spread your funds out among those countries, and that can help provide some protection from political risk. Of course, that's country specific. Another way to diversify your
Portfolio.
Another way to diversify your
Portfolio.
Another way to diversify your portfolio is within your business interest, and that's something Sasha knows well. So tell us a little bit about what you are up to.
What am I not up to? So I would say I'm an entrepreneur first instead of an attorney. But I have my own law practice that I do like legal type work. I work with a lot of startups and help them set up their businesses. I file the LLC, get EINs. I'll do all the corporate documents that they need, like the operating agreement, partnership agreement, joint venture. If they have employees or 1099 contractors that they're going to be hiring, I also do those agreements. So working with a lot of startup businesses, I kind of saw my way to work with them as not just an attorney, but more of like a business strategist and consultant, and kind of help them to one, narrow down their business plan, also figure out like what they actually need to do in terms of growing, and if they do need an investor. And then 3 would be where I would kind of help them get funds. And in doing so, I kind of connected friends and clients with other friends and clients, and am now part owner of a bar, which is so outside of my comfort zone. But I'm learning everything that there is. I also now know how to file a liquor license and permitting process, and it's been exciting and just very different. So it has nothing to do with like my like traditional legal practice. So I have my legal practice, I have a bar. I also am working with a title company. So I used to, through my law practice, I would run my real estate business through it, and I would draft the agreements, and then for any title work, I would outsource that. But now it's all in-house, so they get to see me through the whole process. So that's kind of tied into my law firm, but those are like my 3 main ones. And then now I'm also getting into Airbnbs. We're going to be doing a project together. So it's kind of, I'm trying to keep everything kind of where I can like put my hands like around it. Like I know something about it. Obviously the bar, I don't know much about it, but that was just something different and something that we saw a need for in Nashville, specifically that type of bar, that we wanted to provide that, and then now I get to participate. So,
but I think it's good to do what Sasha is doing in real life, about how you just take in and jump into something that scares you, that you know nothing about, and learn as you go. Like that's, high risk, high reward,
Diversifying your interest. I like it.
Get out of your, like we said before, get out of your comfort zone and into your growth zone.
That's so true. I like it. I like it. So a lot of people ask, well, how do I know if I'm diversified? Take a look at your current holdings, and that can be everything. Your cash, life insurance even, your investments, whether that's a retirement plan, just a general investment account, taking a look and then really digging in deep to see what your underlying holdings are. Because even within your investment and retirement accounts, a lot of people will hold mutual funds. Take a look at the top 10 holdings within those funds. You may have a lot of overlap and not be as diversified as you really thought you were. Yeah. So doing a deep dive and seeing what you're actually holding.
Well, thank you again for watching this Wednesday for our Wealthy Wednesdays with the Property Queens, and we will see you next Wednesday. Bye.
Bye.